Are we heading into a market recession? Even worse, a market depression? What's up YouTube, Bismath here. Welcome back to my channel. In today's video, we're going to talk about the changes in the economy and how it impacts real estate investees, specifically wholesaling real estate. Now, as you all know, we recently had this huge pandemic happen to this industry, to this country, and the government basically did a lot of things in order for us not to hit a depression once COVID happened. And that increased everything. That increased stock prices, cryptocurrency, and real estate. But now the government needs to bring back values to normal levels so we won't be an inflationary period. So in order to do that, one thing they're doing is they're hiking up the interest rate. And the stock market and crypto already have felt the impact of what the government is doing, right? The stock market is down, cryptocurrency is down. Well, not down to like pre-pandemic levels, but I mean, they're pretty close to those levels. It takes real estate a little bit longer to feel that impact of what the government is doing with interest rates and all these other things. And so we're finally seeing slight shift in the market where people are not bidding 50, 100 grand over asking, or there's not a ton of offers on a specific property. Yes, the demand is still high and we're trying to crank up as much supply as we can, but there's definitely a shift in the real estate market. So what can we do as wholesalers to prepare for this new market change? And if we're actually heading into a recession, my opinion is that we're actually heading into a recession. Well, technically whatever a recession is, which is essentially once you have 2 quarters of consistent declines in GDP. And first quarter, it was a decline. And the second quarter comes out, I think in either late August or September, one of those days. Most likely it will be lower than the quarter before, which technically means we're in a recession. Now, I don't think that we're going to 08, 07 levels, but I think there is definitely a shift where we're going back to normal levels of things. So essentially, we're not really heading into a depressionary state of the economy, because what the Fed is trying to do is just bring us back to normal, consistent growth levels, right? Because what they did with printing money, it just really hiked up prices for everything. So they're trying to bring it back down to normal levels where you usually see the increase. And so, for example, if your house before the pandemic was worth $175,000, at the peak afterwards, like a few months ago, it was probably worth like what, $300,000. What the Fed is going to do is just hike up interest rate, and so now your house may be worth $250,000. It's still higher than early 2020, but it's not as high as it was, you know, at the peak of low interest rates and the printing of money and everything like that. And so that's what I see happening. I don't think we're going to go lower than pre-pandemic levels. We may hit that level, but I don't see us going lower than that. And if you call that a recession, sure, that's a recession. But you know, we've been still riding the wave of increased values, increased everything since what, 2012 and whatnot. So I think honestly, most likely will continue. In today's video, I'm just going to break down what you should do in wholesaling, you know, because you have to adjust what you're going to say to sellers. You're going to have to adjust what you're going to do in your marketing techniques and different things like that. So the first thing I want to talk about is, number one, you have to adjust your offer price. So when you're talking to sellers, you can talk about the economy. They're watching the news. You can talk along with them. Say, hey, yeah, interest rates are higher. People are not getting as much as they want as before when interest rates were lower, and you can just explain to them, you know, the reasoning behind that. And so with that, you can put that into your offer price, right? You can implement those strategies into your offer price to offer a more fair value price for their house, as opposed to an overinflated value for their house that some wholesalers were doing before, which actually did work because people were still buying houses for super high. But what was working earlier this year or last year is probably not going to work for the rest of this year. And so with higher interest rates, you have to understand that your cash buyers that you're selling your deals to, they are most likely financing the deal. Let's say they're going to turn your deal into a rental, or they have to hold this property and hold it with interest on the property to flip it or whatnot. Or let's say they have to flip the property and they know they're not going to get the price that they want as before, because now home buyers are looking at interest rates, and so they're not going to buy it at exactly the super high price as they did over the past 2 years. And so you have to think about that when you write your offer over to a seller. So always be more conservative around now, you know, with the market changing and everything, because you know you have interest rates in mind for your cash investors. And hopefully, you know, this comes through through to sellers that they understand that, hey, it's not January 2022 or it's not July of last year. This is a whole different market that we're heading into. And so, hey, this is my price now. You know, interest rates are higher. This is what I'm going to act for this property. And you have to just adjust it, but continue on making offers and doing deals. I think one thing when you're adjusting your price is you have to look at the most recent data. For example, if you need to research ARV after repair value or the market value of a property after it's fixed up and it's nice looking and everything, is instead of looking at like a 6-month trend, like it's going to be skewed because like the houses 6 months ago are different than the houses selling right now, right? And so if you can look at data within the past month, within the past 2 months, if you can, like look at Zillow, look at the sold data on PropStream. If you all are interested in PropStream, check my link down below. You can get a 7 free day trial. But on Zillow, on these websites, you can look at sold data over the past week and look at the history of price. I know on Zillow, you can go in and you can look at, okay, what was it listed at and what did it actually sell for? How many days was it on the market? And you can look at if the price that it was listed at, did it sell lower than that price? Did it sell at that price? Did it sell higher than that price? Because a lot of times when I was looking at this data over the past few months, I know it sold over what they were asking. Now I'm seeing more and more listings selling at asking or a little bit lower. For example, I made an offer on another rental property. It was a duplex property and it was for sale by owner and they had it listed at $230,000. I looked at the property and said, hey, you know, this can be a good rental. But you know, I just left my offer with them and I offered $180,000. That's $50,000 less than what the owner was asking for the property. Maybe the property value was a little bit lower than that, but I got an email probably a month later and they told me, hey, we're still thinking about it. We'll let you know, but we know the owner doesn't want to go below 200,000, right? She's looking for around 215 for the property. So even then, like I could have gotten the property either at 215 or $200,000, right? Which is lower than the asking price on this particular property. Now I just stuck with my guns. I was like, hey, I'm sticking at 180. They came back to me and said, hey, would you do 190? I stuck with my guns. I said, I'm going to do 180. And now recently they emailed me back saying, hey, if you're not going to go through a listing agent or use any of these services, you know, she may take your offer at 180. So isn't that crazy that this property, this duplex property in a decent area that can rent well, was listed at $230,000 and they're down $50,000 from this property? That's crazy. Like that wouldn't have happened earlier this year. So I'm already seeing adjustments with homeowners, and this is a for sale by owner, which translate really good into wholesaling real estate because you're dealing with homeowners, right? And so a homeowner may think, oh, my house is worth this much. You're like, hey, the market's changing. I'm not at this number. I'll follow up with you every few weeks, or if it's a hot lead, like a few times a week, and just, you know, stick to your guns, stick to your price, and just check up on them. And you'll see more and more sellers are going to adjust their price to fit the market demand, the market situation that we're dealing with right now. So the next thing I want to talk about is in your wholesaling real estate business is to make sure you keep on doing what you're doing. I think a lot of people, let's say they may be afraid. Don't let the news scare you, right? Or anything like that. Like stick to your marketing plan, keep on making the same amount of calls. Yes, you're adjusting your price, but don't stop your marketing. Don't stop something that is working. You're cold calling. Like if you're cold calling 10,000 leads a month, keep on doing that, right? If you're sending out 10,000 letters a month, keep on doing that. Maybe even increase it if you know deals are going to be even lower now. And on top of that, now you can look into actually acquiring properties for yourself if you don't want to just wholesale every single deal. Another thing is that when you keep on doing what you're doing, the buyers will come to you. If they notice that other wholesalers are dropping now, maybe they're just so fearful, they know they have one person in you that they can go to and sell or buy, right? And they will be a loyal to you. So make sure you on doing what you're doing. The other thing I want to talk about a little bit away from wholesaling, but still in the investing realm of things, is to diversify. I think now more than ever is your time to, hey, put some money into an index fund, right? Like stocks are down like what, 15, 20%, like some good companies, right? Make sure you put a little bit in that or in some precious metal like gold or silver or other securities, but always make sure you diversify and keep a little bit of cash. And the reason why I say keep a little bit of cash is that you want cash in order order to pay for things and to live, right? Because prices, food prices, gas prices are still relatively high. You need cash to live, but you also need cash to invest more into your business and invest in deals that are heavily discounted, right? In those properties, in that rental property that you finally want. Now you can get it at a good price. So make sure you diversify during this time. All right, you all, I hope you all enjoyed this video on what to do, what changes you should make during this recessionary time that we're heading into, what pivots, what adjustments that you should make in your wholesale real estate business. All right, you all, I hope you all enjoyed this video. Be sure to like, subscribe, comment down below.